And may I please request the CEO panel to join me on stage? Could I request the President and CEO of National Bank of Pakistan, Mr. Rehmat Ali Hasnie, the President and CEO of HPL, Mr. Mohammed Nassir Salim, the Deputy CEO of Meezan Bank, Syed Amir Ali, the CEO President of HPL Microfinance Bank, Mr. Mohammed Amir Khan, and the CEO of Mashreq Bank Pakistan Limited, Mr. Mohammed Hamayun Sajjad. If you can kindly join me on stage, we can kick off the CEO panel. This discussion will be moderated by Syed Faraz Anwer, who's a partner at AF Ferguson. So if Faraz Saab could also join me on stage, please.
Okay, so we are beginning, and over to Mr. Faraz Anwer, the moderator for the session from Ferguson's PwC Consulting, a great friend, and over to you, Faraz Bhai. Thank you.
So thank you very much, Hamza, for a kind introduction for ourselves. And I think I see some number of people standing. So it's better that if you could please have a seat so that I'm able to start the proceedings of this important session, please. Amir, there is going to be a very long period of time available to you for having some relationship sessions. Okay, so should we initiate? Rabia, should we? Okay. All right, so the topic is very important. You know, I mean, we're talking about agri and SME, which are the priority sectors of Pakistan. And before I start this session, it's important for us to have an idea of some of the numbers that are, you know, I would say, please, if you could please have your seats. It's very difficult to start the session when it's so much of distraction at the back and in the front. All right, so I would like to share a few of the important statistics. I think you've been hearing about these numbers from the first half speech as well as Salimullah's speech. But just to make sure that we are able to have some comparisons run of the Pakistan's SME and agri financing intervention versus the similar numbers in the other countries. And when we talk about the other countries, we talk about countries such as India, Bangladesh, Vietnam, Philippines, and a couple of other countries. This is to give you a bit of an idea of the magnitude of the problem that we are facing with respect to such a marginal penetration in these priority sectors for such a long period of time, and to give you also a bit of an idea of such a large potential which is available for penetration by the banking industry or by the other industries in the country. So just to give you a bit of an idea about the most important indicator of the financing in the country, which is the private sector credit. So Pakistan is standing at about 11%. The countries that I just talked about are standing at about 25 to 30%. Our ADR is about 40%, which obviously is an indicator of the loans that we give out of the deposits that we take from the public. And the countries that I mentioned in my conversation are standing at anywhere between 65 to 85%. Then we move on to the other important indicator, which is a combination of the agri and SME sector credit in Pakistan as a percentage of total loans. So that is just 7%. So 15 years back or 20 years back, we were standing at about 19%, and now we are standing at about 7%. And this penetration level in the other countries is anywhere between 25 to 30%. So here we haven't really heard about any of the number which is getting into more than 10%. So let me share with you some more numbers. The value chain financing in the overall SME financing, not the total financing, but in the overall SME financing is just 1%. The female financing in the total SME financing is just 2%. So this goes to show the kind of potential and the space that is available for intervention by us combined, and this is where the opportunity really lies. So this is for the banks and for all the other different non-bank participants to really conceive some collaborative models to be able to create the right kind of impact in this sector. So with this, I would like to, obviously, the panelists who are sitting over here do not need any introduction. All of them represent organizations that are creating the impact or are in the process of creating the impact, not just in the SME value chain, but also in the digital supply chain financing. So with this, I would like to start the proceedings by asking my question to Nassir, who is representing as a CEO of HBL. The HBL has done a wonderful job in terms of extending credits to the SME and both the SME and agriculture sector. And I believe that's one of the largest and one of the most innovative agri lenders and SME lenders in Pakistan. So I'd like to ask a question from Nassir is, how do you see, Nassir, this opportunity in digital SME and agri financing? And we hear a lot of challenges around lack of data, undocumented sector, they dealing in cash, the collateralized lending in Pakistan is just 2%. Uncollateralized lending in Pakistan is just about 2%. And most importantly, we also hear challenges about the lack of availability of data for alternate financing, and also challenges around the fact that only 10% of the overall SME financing is cash flow based, and the remaining 90% is collateralized. So with these challenges, how did you navigate and how did you create the value proposition for value chain financing, and how did you achieve the success in these areas?
So thank you, Faraz, for this opportunity to share our learnings. So frankly, when you look at the SME sector, as Faraz said, we're the #1 bank in terms of SME lending. When we look at the agri sector, again, we are the #1 as far as direct farmer lending is concerned. So that's like the micro numbers for HBL, and then obviously HBL Microfinance has additional learnings and numbers. But when you look at the macro picture that Faraz painted and the conversations that have happened in the morning session, the clarity is that what we're talking about is being #1 in a very small space. Our key to success really may or may not be the full model for the future as we look to rapidly expand the opportunities in this space. So what were the advantages that we had? One was, the 1,700 plus branches that we have all across Pakistan. So that gives us feet on the street. It gives us a pulse on the customer. So I think when we talk about, and this is a digital conference, but we should not forget at the end of the day, we're talking about human beings. We're talking about small sole proprietorships, small partnerships, and character becomes the first thing. We have looked at our existing customer base. Our strategy has always been expand the number of customers that we have at HBL. So when I look at the number of customers and compare against the next two larger banks, we still exceed in terms of number of customers that we have, which is about 38 million customers on our books. The second piece is, and I've talked about this again and again, we have to look at this as a business proposition. We have to look at it as a segment, a profitable segment that we need to get into, which means we have about 800 people, that are deployed in the origination as well as maintenance of these facilities. There is a segregation between identification, the initiation and booking, the life cycle management, and the collections management. You need to have the models in place, both in SME as well as the agri and the agri-related SMEs. The other element that we need to look at, which is going to be exceedingly important, and that is what the conference is about, is the supply chains, is looking at that flow, getting the data from it to make the sound credit decisions. And that's going to allow for expansion of this as an industry. All of us have a role to play in it. But until and unless we invest in this business and put that right structure in place, we will lose. So for example, Salimullah Saab talked about, cash flow lending collateralized. Out of our 100 billion, we've crossed 20 billion in terms of pure cash flow, non-collateralized lending, and our delinquency numbers are looking very, very healthy within our portfolio estimates. And that is based because, given our size, we have a lot of large corporates, we have a lot of large M's within the SMEs, we have the small segment, and we also have the micro segment. So I think for us, the opportunity is now, how do we leverage the combination of increased digitization? And we talked about, incentives to get, more digital so that that data can become available. But ultimately, I think we will need to get to a place where we also supplement it by incentivizing cash. Because as long as cash is the easiest option, we will continue to have a very obscure line of sight at the grassroots level. So we now have cash well embedded in the corporates, the elimination of that. We have the elimination of that relatively well embedded in the medium-sized enterprises. But on the small scale, we still have cash collections that go directly to the distributors. If that cash collection can go into that small entity's bank account versus the collection, and that becomes a digital transaction, I think the line of sight, the visibility into the small sector will significantly increase. Similarly, we've got a lot of wallets out there. I was sitting with Farooq, who's just moved over to Jazz, right? We have our own wallets as well under Connect. So what we are using these wallets today is primarily, for either recharge of prepaid cell phones or for transferring money. So we're using that as churn. How do we use that data that the telcos have and that large banks that have wallets, they already have that data? That's the next step that we're focusing on, that if we can also look at digitizing the micro segment, then we've got an ecosystem that really covers the entire industry. The other element for us is, from a country perspective, our direction over the next 5 years is to go from import-led GDP growth, to an export-led, value-added export-led GDP growth. In that transition, as we look at the small sector, as we look at all of these, we must prioritize, in addition to female entrepreneurship and others, the export-related downstream industries. And it could be as simple as somebody making buttons or somebody making tags, but ultimately they're going to get used in a made-up garment for export. So what is the value creation we can do? We need to stop sending low value added or no value added exports. We need to start to look at packaging. So when you look at examples of what some of the industries have done in the spices, and now that is packaged and exported, the value that you gain versus sending a bag of red chilies, is much more when you package it, in easy-to-use mixtures. So similarly, there's a lot of low value added or no value added that gets exported. How do we capture the value addition in Pakistan and take it forward? Lastly, when we start looking at industrialization, or rather re-industrialization of Pakistan, we must stop looking at this is what we're doing to fulfill local demand. Unless we see this factory or this industry being set up that is going to export a portion of what they are making, we are again running into an import-driven GDP growth for local consumption. So I think, for us, from my perspective, there is no substitute for the knowledge of the individual borrower, the feet on the street, and the ability to keep a health check of your credit. But the more we digitize, the better data we get, the cost gets taken out of the acquisition and the maintenance and the life cycle. And thirdly is prioritizing the export industry, the value adds. Those would be the three big things, I think, for us, which is the way forward, as well as mobilizing the micro base, which then becomes a feeder for the small businesses.
Thank you very much, Nassir. I think I would tend to agree with you with respect to the use case for the wallets. Our study also shows that roughly 70% of the wallets are used for P2M and only 30% for P2P. It goes to show, the kind of businesses deal with such wallets, the people also. So now I would move on to Rehmat yourself. So you also one of the larger lenders in the SME and agri spaces in Pakistan. And also you have been able to take a lot of advantage of the feet on the street model that Nassir has just talked about. But despite all this, obviously we do see pockets of excellence, we do see pockets of penetration, but we talked about the overall penetration level in Pakistan is very low. So what do you think, which enablers would you suggest for adoption at an industry level and also for adoption by the regulator to really push this through, although we have been hearing a lot about some things happening at the PBA level and also at the regulator level, but from a banker's perspective, what suggestions would you like to make? And also, we did talk about the loss sharing and credit protection schemes being introduced over time and the utility of those schemes, whether or not these have been helpful in accelerating the pace of adoption. So what are your views around these, Rehmat?
Thank you, Faraz. It's tough to follow on Nassir's conversation, but let me try to give some perspective. I think if you look traditionally at the SME model and how banks approached it, and at National Bank also, we used to have a prerequisite to SME financing in the traditional sense, where we required businesses to have a relationship with the bank for X number of months to be able to assess cash flows and to be able to assess volumes of business and to establish a relationship and the character assessments that were needed. I think the single most important part on that or the impediment to that model's growth was the fact that SME borrowers, potential borrowers, they wouldn't open bank accounts that much. Cash being cash, it was more about cash deposit into bank accounts, and therefore that behavior and that assessments took a longer time. So the introduction of the digital mechanisms, which are convenient, the P2Ms and the various other modes which enable small businesses to digitally transact with each other, that have come in the past some years, that have made it easier for those businesses where this adoption has taken place. But the fact that our currency in circulation to M2 ratio remains very high indicates that still there is a preference not to transact through the banking channel, but more through cash. I think the single major change that has to take place, and part of it has to do with the banks themselves, and part of it has to do with the SME businesses, is that the banking channel is a necessity, almost a utility. As Zafar, I think, mentioned for Nadra, that to be able to do business, you have to have a bank, and you have to have a banking access and banking channel just to enable your business to grow faster than it would if it was purely driven by an equity-based mechanism. That understanding of businesses and the convenience of opening bank accounts and using banking channels to receive payments and to make payments that will be the single biggest driver for the growth of SME loans. Because once that banking transactions take place, then almost the next step or logical next step is to make OD lines available to customers, etc. And the credit scorecards become very easy to put in place. And for that, I think really, and I do give credit, and I think HBL with Connect, ourselves trying through our own digital app. That is the real thrust of the digital app usage and the digital wallet usage that the banks are headed towards. It is to democratize and make digital banking an option for the Aam Aadmi. Then you have an ecosystem which promotes the lending part. The transactional part has to precede the lending part if you want to see a large growth in this area. I do think one important area, and I made this point before at another forum, is that really when we talk about 550 billion SME loans outstanding for the banking system, I think there needs to be a relook at how we as bankers define an SME versus how everyone else, aam fahm, SME ko define kiya jata hai. And by this I mean that there are three essential criteria for an SME definition. One is the number of employees, the other is a turnover, and then from that, under state bank regulations, a certain percentage of the turnover is the loan amount that makes the loan an SME loan. And when you take all of that entire lending activity, that is 550 billion rupees. I personally, I mean, having the experience of looking at SME lending at National Bank, I really don't, I think there is a large, the significant need to take a relook at that definition itself. 200 million is the turnover per annum maximum for a medium enterprise and a certain number of employees, and a percentage of that becomes the maximum loan.
Yeah.
It is tough to look at that and apply it to the entire spectrum of SMEs that the banking sector is expected to cover. And I think, this definition was made maybe 5 years ago, 6 years ago, when perhaps the easiest way to look at it is the dollar was at a certain price. Today it's a different rate. So even if you're looking at exporting SMEs, a 200 million annual cap is actually pushing the bar downwards. Or in other words, what used to be an SME yesterday may not be an SME anymore, simply because the amount that the turnover due to an export volume has risen. So I think there is a need to relook at that and approach it holistically. But I do see the importance of digital taking this entire thing forward as an enabler. Perhaps they may, for the foreseeable future, not be an option, not be an alternative to some human being making a credit decision. But I think that, but to make that decision faster is what digital will do in the short term for the banking system. Thank you.
Yeah, thank you very much, Rehmat. I think both Nassir and yourself have been talking about the use of a model that involves physical interaction with the customer for an understanding of number A, the credit needs of the customer, and also the credit evaluation of the customer. I think this is a point worth discussing with Hamayun is sitting over here and representing Mashreq. No, Hamayun, I'm not coming on to you. I was just trying to give you a heads up. I would rather speak to Amir about the course of Islamic banking. I think probably there has been a lot of conversation about Amir Ali. I know. So I'm so thankful to you for Amir Khan and Amir Ali. So Amir, when I talk about Islamic, obviously, you would tend to agree that Amir is the one who is going to be representing the largest bank in Pakistan, right? So Amir, there's a lot of conversation about the demand side potential for SMEs and agri, both SMEs and agri in Pakistan with respect to Islamic. So there's no second thought about it. There's no second opinion about it. But if you look at the numbers, and if you look at the fact that on an overall basis, 3.7, 3.8% is SME versus the total financing. But when we talk about Islamic, it's about 1.6 to 1.8%, right? So this is an area worth exploring with you as to what is the reason behind the number not being so optimized versus the demand side potential that we have been hearing about. And also, do you anticipate any supply side challenges which need to be addressed so as to make sure that we are able to really crystallize this opportunity well?
Thank you, Faraz. I think good afternoon to everyone. So all these points are very relevant. So let me try to pick each one by one. Let's pick one side first, which is the demand for financing in Pakistan. So if you look at the numbers, which is estimated in Pakistan, number of SMEs operating, they are roughly over 5 million SMEs operating in Pakistan. Those who are getting financing from commercial banks are roughly 175,000 only. The rest are going to other specialized entities like microfinance banks. So this is a very, very small fraction of SMEs who are actually borrowing from the commercial banks. Roughly 3.3%. Now, there are definitely reasons behind it. One reason is that they want to have access to financing, but that is not available. And that is not available for multiple reasons. A, the ability of the commercial banks to service and understand their needs, and B, the absence of specialized financial institutions who can focus on SMEs. And we have seen this very clearly in case of microfinance bank, that the number of, I always look at the number of parties or the customers or the borrowers who are taking financing rather than the value, because when you look at the value, then probably government is the biggest borrower and it crowds out. So if you look at the stock of the government domestic borrowing, it's north of 43 trillion. And it has gone up from 35 trillion last year. So there is an increment of over 8 trillion, which means 2 trillion every quarter, right? And if you look at the number which State Bank now is targeting for SME financing to grow is to grow it to 1.1 trillion from 550 billion. So an increase of 550 billion in a year's time. And in every year, there is a crowding out by the government of Pakistan by borrowing an additional 8 trillion rupees, right? So definitely, if you look at the large commercial banks, they have deposits available and they have the ability to use those deposits to actually fund different types of customers or borrowers, and SME is one segment. So I always look at SME in terms of number of borrowers or number of parties taking financing rather than the value, because you cannot compete on value with government of Pakistan, right? In terms of the funds being channelized there, they are completely being crowded out. The SMEs and even in some cases corporates, you talk about the ADR also. So definitely there is a competition of the total funding available and the demand which is coming in, and which is the easiest thing to do in Pakistan or anywhere in the world. Investing into government treasuries is the easiest thing to do anywhere in the world. So this is a tougher piece to do. So we have to do some more development work around it. And I like to highlight certain things which are important, and I wish we can jot these down. There are very good discussions going on, and I love Hamza to actually jot down all these good discussions and make a white paper out by the end of this conference, so that when this conference ends, there is an impact and there is something out there which we can look into and which can try to implement. So one thing is definitely, which Rehmat has already touched upon, is the definition of SMEs. This definition is there for quite some time. I think at a central bank level, there is a need to change it. Even just 2 years ago, when the dollar to PKR parity was half of it, what it is today, the same number was there for the revenue determination, for the financing limit determination. So the maximum one can lend it to a SME entity is 200 million rupees, a medium entity. So all these limits have to change now. And there is one interesting thing, when we talk about the cash flow based financing instead of a collateral based financing, so we have to keep in mind that for a very long time, the bankers are being trained to finance on the basis of collateral more than the cash flow. So there is a new orientation for bankers also. So definitely there is a need for a completely independent vertical, which banks have set up. Some of the banks have set these verticals very well. My bank has also set up that vertical. So that vertical has to be staffed by people who have a cash flow based financing mindset. And when we come to a cash flow based financing mindset, then this whole digital piece is very important from the supply side, which you call digital supply chain finance. So we have been trying to do SME financing for quite some time, but doing it in a human intensive manner. I think we have all tested, it has not yielded result to date. So we have been trying to do it for last 50 years and probably will continue to do it for next 50 years, but I think the results will still be not very encouraging. But with the help of digital supply chain finance, we have recently done an experiment whereby we enter into an arrangement with anchor corporates, and in a period of 18 months, we were able to disburse 28 billion rupees and we were able to execute 32,000 transactions. With 32,000 transactions is quite a large number, and all these transactions were executed, most of the disbursements were executed digitally in probably less than 5 seconds. What number I get is like 3 seconds. It's the time required to disburse funds into a customer's account. So with the help of digital supply chain finance, I think it is possible to convert our dream of helping the SMEs to rely on the organized financial institution. Actually, even today, SMEs are taking funds from different unorganized persons, but to help them to come to this platform, there is a need for a ecosystem. So now this ecosystem is being built. Now what is more important, that the bank should work together and connect with each other and help corporates to connect to each other. Because actually when you look at the supply chain finance, which is the topic of today's discussion, it is a vendor or a distributor which is working with an entity which is a manufacturer of a goods. So we have to connect the entire supply chain. There has to be a person who's actually making the finished product. There has to be a connection for financing those distributor and retailers who are selling those finished products. And there are multiple whole downstream industry in the form of various vendors which are making different components to that main manufacturer. So there is a need to link all of these. So there are corporates which are definitely using good ERPs. They have good linkages. They are generating invoices. They are generating purchase orders, sales orders. So it is important for banks to understand how actually when a corporate entity buys anything or sells anything, how does it work, and then we have to connect those anchor corporates into the bank system. So when I gave you the example of about these 32,000 transactions, so it was about connecting that anchor corporate and the distributors into that digital system. So once they are there, it's very simple to have a complete track of things, even if the funds are not in certain cases directly moving from one account to another account, where the retailer is depositing funds directly into a distributor account, and distributor is actually selling the products on behalf of the anchor corporate. But because we know there is a sales invoice being generated between that anchor corporate and that distributor, so we know there is a transaction happening, although some part of the transaction is not being completely settled in cash, and the cash is coming directly sometimes into a corporate account or a distributor's account. But when you are integrated into a supply chain finance ecosystem, even the need to assess credit on the basis of reviewing the bank account statements of an SME customer, which is a standard model for banks. When we determine a credit limit for a SME customer, we look at the bank account statement. But if you have a track record from an anchor corporate showing, because you know this, when you go into any company's journal ledger, there is subsidiary ledger. In subsidiary ledger, each distributor and each vendor has an accounts payable code and an accounts receivable code. So if you are working with a corporate, you can see how much sales are being churned out of that particular distributor, or how much goods are being, or raw materials are being purchased from that particular vendor. So with the help of that anchor corporate, now you have real data. Earlier you only had a proxy data looking at the bank statement. So with the help of this digital supply chain finance, I think we can only make this dream come true. Otherwise, we will continue to work around, and these workarounds will end into roadblocks and will not grow. But few things which I like to add here from a regulatory perspective. So if these points are converted into an actionable item. So one thing which is important, to the best of my knowledge, there is a limit which is allowed to SMEs, which is 200 million. But simultaneously, when you do cash flow based financing, it is important that the contract enforcement should be strong in Pakistan. Unfortunately, on an overall basis, as per Rule of Law Index, we rank 130 out of 140 countries. On a civil rule of law enforcement, we rank 128 out of 140 countries. So I don't think we are in a good shape. But there is a separate judicial system for actually adjudicating smaller loan defaults, which is the banking court. The banking court were allowed to decide on loan defaults of up to 50 million. I think that has been increased to 100 million, but somebody can reconfirm that to me. So now there is need to have an alignment. If State Bank is saying 200 million and the banking court is saying 50 million or 100 million, I think both are not in sync. So at least to help SME sector, where we have 5.5 million SMEs, we say they give 80% of the non-farm labor employment, they contribute 40% of the Pakistan GDP. There have to be a sync between different regulatory authorities, that what courts are deciding, what banking regulations are saying, and then there is a need for bankers at the forum of PBA and this NIBAF or IBP, that they are judges in banking courts who need to be trained in banking. So as far as I know some of the judges, it is considered to be the worst posting to get into a banking court. So good judges don't want to get into a banking court because it's not something very exciting for them. We have to invest in the training of those judges so that when these new judges come in, they are trained. And I think banks have to step forward for that, the Institute of Bankers and the NIBAF, to train them so that it becomes an interesting assignment for them. And they understand what banks are doing. And once they sit down with bankers and those training sessions, they will get to know that generally I would say 99.99%, when a bank go for a recovery effort, it is completely professional and it is completely honest effort. There is no other intention in pursuing a defaulter in a banking court or in any other court. So we have to train them, the judges. We have to complete the ecosystem on the digital side. We have to align the financing limits, and plus SMEDA is an authority which is there. It used to do a super good job. It's still, I think, struggling. There's an again need for banks at the forum of PBA and SMEDA to collaborate, because SMEDA is a government-funded authority. So if we can engage them and give them some funds collectively to do certain studies to help SMEs out, unless and until there is a complete ecosystem, we will continue to struggle and we will continue to hit roadblocks. So these are some things I think these are important to work on this. At the last point I want to also add, I know you are running out of time.
Quite short of time.
Quite of time. Is the focus of this sector specifically focusing on those SMEs which are helping to grow our exports. If you look at the composition of Pakistan GDP, 86% of the GDP is from the consumption. So it's the C. It's very unfortunate. So every time we grow our GDP, we have a huge current account deficit, because only the export is coming roughly 17%. So we should help those SMEs and help those corporates first who are contributing to exports rather than who are contributing to consumption. Because if we still continue to grow our GDP based on consumption, we will again get into a foreign currency default. Thank you.
That's a bit of an elaborative response, Amir. Thank you very much. And I'll beg to ask the organizers for 5 minutes more on our account, so that we are able to cover both the esteemed panelists who are here to respond to their questions. Hamayun, many congratulations to you, on securing the digital banking in principle approval. And now I know that you're heading towards the commercial launch. So first of all, many congratulations to us from your side, from our side to yourself. So now we see a lot of conversation about the expectations from the digital banks in both the SME, especially in the SME space, by the way, and considering the fact that we have got a very low financial inclusion in the SME space and the credit inclusion in the SME space. So one of the challenges which has been talked about, the fact that there has been an expectation for a feet on the street model or some interaction, physical interaction with the SMEs. So besides these, there could be few more challenges which digital banks may be facing when they set up their SME and agri-finance proposition. So how do you think those challenges, how do you feel that the digital banks would be able to address those challenges, and also what enablers do you think would be required by the digital banks from the regulator, especially for digital onboarding, for servicing, and for financing of the SMEs?
First of all, thank you, Faraz, for asking a fully loaded question. Over the weekend, I actually ordered some fruit from, I love going to this strip on the Zamzama, and there are a bunch of hawkers. One of them is Ejaz. I couldn't leave home. I just called the guy. He said, "Sir, bada fresh fruit aaya hua hai, chonsa special aaya hua hai." I said, "Okay, fair enough." I asked him to pack few, fresh fruit items, and then I sent driver to collect the fruit. And I asked, did the guy ask for money? He said no. So I then called the guy. I said, "How much is the total?" He said, I think something close to 4,000 something rupees. And he said, "I'm sending you the bill on WhatsApp." Mm-hmm. He sent me the bill. By the way, I love National Bank's digital app. And I just asked, should I do Easy Paisa, Jazz Cash? He said, the same number, available on either. I did the transaction, and after looking at the receipt, I shared it on WhatsApp. He said, "Thank you." And I was just looking at the receipt, and the receipt did not say Easy Paisa or Jazz Cash, so I was just wondering if he is aware if the money landed in Easy Paisa or Jazz Cash. So just a small thing that I realized while looking at the receipt. The other thing that I did over the weekend was to get my sofa fixed. Called this sofa guy from Gizri. He looked at the sofa. He said, "Ke ko 1.5 lakh rupees ka kharcha hai." I said, "Okay, fair enough. Kapda change karna hai sofa ka to." Then he said, "I need 40,000 rupees in cash." I said, "Why don't I transfer Easy Paisa, Jazz Cash?" I don't know Easy Paisa, Jazz. I don't even have WhatsApp. I said, "Fair enough." So I had to make an effort, go to ATM, got the cash, gave him the cash. A few days later, he called me and he said, I'm at the cloth shop, and I just bought the cloth. Can you make 50-something thousand rupees payment to this guy? I said, "I'll make it to you." He said, "No, here's the account number." And he actually gave me an IBAN. I had to make the transfer. It was a sofa something cloth shop. I made that payment to him. A few days later, he said, "I need 40,000 rupees more." I said, "Deliver me the work and get your money." He said, "No, sir, I'm in a dire situation. I have to pay my electricity bill." I said, "Okay, fair enough." But then I thought, he said, "I'm coming to collect 40,000 rupees cash." And I was like, "Oh my God, 40,000 rupees. Again, I have to, Mashreq doesn't have a ATM of its own, so I had to do 20,000 rupees transaction on the ATM. I said, "Okay, well, let me know what kind of." He said, "I'm sharing the K-Electric bill with you. Why don't you make this payment?" And I paid for his electricity bill using, again, thanks to Rehmat, National Bank mobile application. But the point I'm trying to make is, I was just wondering, how is he going to reconcile all of this for his business? How is the hawker going to reconcile if the money is in the Easy Paisa or Jazz Cash? The third thing that I want to talk about is about ISO 20022. This is the latest message of ISO, which is an upgrade of empty messaging. All of us from a banking world know what the importance of empty messaging is, particularly for the trade transactions. SWIFT said 2025 is the deadline. All banks across the world must make sure to comply with ISO 20022. You know the important thing about ISO 20022? It is the faster payments underlying fundamental protocol. The other thing about this message is XML, extensive markup language, where it captures the details of transactions. Just imagine the hawker, once this ecosystem is ISO 20022 certified, will be able to reconcile how the transaction from a customer landed into an account. All of this is very important, but let me take a step back and give example of 3 markets here. US, SME market, 33.2 million SMEs in US today, making up 99.9% of the businesses in US. And these guys form 46% of the private workforce in US and contribute to 43% of the GDP of US SME market. And these guys contribute to 32% of the export contribution, which is close to $500 billion worth of export from US. And the private sector financing in US to SMEs is 46.4%. Let's talk about Indonesia, a bit of under and developing market. The population of Indonesia is 271 million, 66 million SMEs. 99% of the businesses in Indonesia is SME. The SME in Indonesia employs 97% of the private workforce and contributes to the 61% of the GDP of the country. These guys, it is a developing country, have 14% contribution to the exports of the country, 14%. And the private sector financing to SMEs in Indonesia is 19%. By the way, 98% of these SMEs are sole prop. Now let's talk about Pakistan. 241 million population, give and take. 5.3 million SMEs? Something is fundamentally wrong. 5.3 million SMEs? And out of these 5.3, they represent close to 95% of the businesses in Pakistan. 80% of the non-agri workforce work for these SMEs in Pakistan. The contribution of these SMEs is 40% to GDP, 32% to the export of Pakistan.
Yeah.
But the private sector financing to these SMEs is less than 6%. 93% of these SMEs are sole prop. The point I'm trying to make here, we have to take a step back as an industry and work on fundamentals. Fundamentals. I don't think these SMEs are looking for money. I don't think these SMEs are looking for any banking. If you look at the number of interventions the government of Pakistan, State Bank, and banks have done in last 20, 30 years, it is immense, immense. And we keep on bringing these SMEs into the fold, trying to do a lot of things. However, look at the SMEs today. If a hawker can sell using social media, no bank gave him WhatsApp, no Easy Paisa, Jazz Cash gave him this sense of collecting money and then reconciling. We've been giving them accounts, we've been giving them banking. These guys are smart enough to know how to make use of whatever we as industry provide them, and we are trying to understand and we're trying to service them.
Yeah.
But to be honest, the change of pace, the digital revolution is far greater than what we can even imagine.
Yeah.
Far greater than what we can imagine. So what really needs to happen is we need to take a step back. I'm talking about what difference digital banks is going to create. I'm sure some of you guys can relate to Dabba AC in the old cars. it was always a box that you could not replace with the genuine AC in the car. You could always tell that this guy has a patch in the car. And that is exactly what is happening with the financial industry and banking industry in Pakistan, because we are not built for digital enterprises. We're not built for this time.
Yeah.
We were built 50 years ago. You tell me which core banking today in Pakistan can support ISO 20022. It's a change request to Oracle, to Temenos, to all of those core banking systems that were built for, I don't know,
Yeah,
So
our time is up.
just to conclude this, Faraz, the fundamental benefit of any new bank, it's not about digital bank, because they are being developed in 2025. It is all about cloud, cybersecurity, data fabric, automation, digital sales and marketing. Somebody selling on social media, I can tell you, even your mohalle wala dukandar, women from household can actually coordinate and get their stuff done through a lot of other channels.
Sure.
Are we going to teach them digital sales and social media and marketing and customer care? Anyway, so those fundamentals is on digital bank side, because the fabric is built on what will last for another 20, 30 years. And that is the differentiating factor that these banks are going to bring in. And just to close,
Inshallah.
Mashreq has this benefit of serving SMEs as a dedicated platform. It's called NeoBiz, and a combination of NeoPay. Just that we've done this in a developed market with 200 nations operating in a small UAE market. That's the benefit that we're trying to literally copy pasting UAE, Mashreq to Pakistan.
Sure.
In the hope that will be our contribution to Pakistan SME market.
Thank you very much. Thanks a lot, Hamayun. So, Amir, over to you now, finally. Now, obviously, we know the dynamics of the microfinance industry, Amir, and that industry is being talked about a lot these days with respect to the profitability constraints and also the kind of NPL which is reaching as high as, 8 to 9%. So obviously, in this case, how do you see digital playing a part in having a sustainable financing strategy for yourself as part of the industry? And also, which pockets of economy, which economic clusters do you see as providing propositions for sustainable growth? So if you could elaborate on this.
Thank you, Faraz. It says time's up over there, and I'm wondering what time's up over here, but reality of life is that we are serving the economic active segment. I have roughly of 500,000 customers. Each loan is cash flow assessed. We give that loan based on multiple factors, and we do it by meeting the customer and then re-verifying it through other. Now, if you look at our base of microfinance, which is 40 million people, collectively, as a microfinance, we have not been able to, I wouldn't say, scratch the surface in terms of the opportunity. But we're serving the agri sector, we're serving the enterprise sector, we're serving the housing sector. With the 100 billion book that we have approximately as of December, 53 billion roughly is in the agri sector. Now, for me, climate change, one rain over here can impact Pakistan, but trust me, when it rains in Pakistan, it rains in Pakistan. I've seen floods of 2010, 2011, 2012, 2015, 2016, 2020, 22. Every year there's some activity going on. And this year we just had another impact from a crisis perspective called the wheat price concern, which crept up. Those are realities of life. We as bankers sometimes look upon them as an event, but the actual farmer on the ground is actually facing it. You go to Badin and it's rained over there, the entire ground is underwater. So we have to support that customer. For sure, Pakistan's land is not going to go anywhere. The farmer will survive this thing. He may miss one crop cycle, two crop cycles, whatever, but then we need to take it forward. So the journey of the future, and I say it's financing for the future, but it's actually financing now that we need to look upon for the future, because the future will only happen if you finance it now, is through digitalization. And it's just not the client journey which needs to be digitalized, and we've spent over 2 billion rupees on ensuring that the client's journey is thoroughly digitized. Every loan office that we have, which is over 2,000 people on the ground, on the feet on the street, each one of them has got a tablet. So it's not that we want the clients coming into the bank. We actually want to be in their house, at their place of residence, And the client journey needs to be complete within a very minimal time, but the rest of the time you deepen the relationship. You get to know the customer. You look at one product, can we sell them another product? We assess the customer. So that is something that needs a big digital structure in place. My challenge is 3G may be available in Karachi, Lahore, Islamabad, 4G is available, news of 5G. But if you go to rural Pakistan, then that's where the real population is. What 3G, what 4G is over there? If I set up an entire digital structure over there, which is totally, I use Oracle, I use this, I use that, tablets, everything. But if access to good piece of technology is not over there, the journey becomes a challenge. So we want to work with telcos to ensure that each and every part of Pakistan is thoroughly digitalized in the sense of giving the environment with the digitalized, as we are all going to be digitalized, the people sitting on the table on this side of the dais, we're going to be digital. But the client's impact has to also be digital. So I know time's up, so I won't take much to our time, but for rest assured on a couple of things that microfinance is a sector that is of Pakistan, the real Pakistan. We need to work towards it. Climate risk is a challenge that we need to recognize and work together to ensure that anyone that of us lends into this segment has certain solutions, but not just which the banks are doing, perhaps the government, also the central bank need to work upon doing so. I know I'm not going to speak much, but I think my time is up because that keeps flashing over there.
Yeah, flashing over there, and flashing for the last 5 minutes or so. So thank you very much, Amir. I don't think, Hamza, we've got any time for Q&A, right? So we'll leave the stage as it is, right? Hamza, thank you very much for your invitation. Thanks a lot, everyone.
If I could please request Hamza to present a plaque of appreciation to Mr. Rehmat Saab, who's taken off, Mohammed Nassir Salim, who's the President and CEO of HPL. Zafar Saab ko. Zafar Saab, agar aap please stage pe aa jaye. So Rehmat Ali Hasnie Saab, President and CEO of National Bank of Pakistan. Mohammed Nassir Salim, who's the President and CEO of HPL, please accept a little token of our appreciation. Rehmat Saab, if I could request you to stay on stage so we can have a group photograph also. Mr. Muhammad Amir Khan, who's the CEO and President of HPL Microfinance. And Mr. Muhammad Hamayun Sajjad, who's the CEO of Mashreq Bank Pakistan Limited. And last but not least, Mr. Syed Faraz Anwer, who's a partner at AF Ferguson Co. If I could request all the gentlemen to just arrange yourselves for a group photograph. And if I could request the audience, don't be shy, it's okay to applaud for them. There we go.